Good weekend. Ira Epstein with your weekend edition of your metal market wrap-up. And this wrap-up is for Friday, the 23rd of February, 2024. And remember, this one we look at the weekly charts. You know, this morning I was giving my morning subscribers an idea was we were going through the charts, and I said in gold, got to watch out here. This market's acting like it wants to move back through the upside. And it was exactly what did happen. You closed up $18, not far off the high, about $4. But the market is saying that going into the PCE at the end of next week and some of the other data that we're getting, that maybe it's pushed itself down too much. I think it looked also at bonds and notes that gave you reversals, and we were seeing that interest rates had gone up like today to, 4.33 in the 10-year, and then all of a sudden they were back at 4.25 at one point here. So you were getting 7-8 basis point breaks in the market, and the dollar wasn't going anywhere. So you were removing some of the headwind in the market. It was a move without the benefit of energies moving higher. They have moved down. And now the question is, OPEC is going to be meeting shortly. Are they going to continue with their cuts? I would imagine they are, because if they go, no, we're going to put 2 million barrels back on the day in this particular environment, you probably get back under the 80 level, maybe even to the mid 70s. So I don't think they're going to be doing that right away. I say that because we don't know what's going on with Israel and Hamas. You know, everybody's trying to get everybody back to the table to get a truce going of some type, because Israel is threatening come the 10th of March. They are marching into Rafah, and they don't care if it's Ramadan, and they're going to do this and they're going to do that. So everybody's trying to come up with a game plan before then to end it. Another thing you have to consider, March 1st is around the corner. I don't see that we've reached the budget deal, and this just might be the point where for a few days the government shuts down. Does it really matter? Probably not at all. We've seen this happen before. It's more politicking, grandstanding than anything. It scares you. It throws a headline out there for 72 hours or whatever the heck it's going to be. Could be up until March 8th, the next meeting date where there's supposed to be something to happen. But there hasn't really been, that I've seen, or that probably you've seen in the news, real progress on the budget and or the president budging on the parts that the Republicans want him to do on the border. And those are going to be two big issues. We're seeing that Ukraine desperately needs the aid that we've held back. That's being weighed on everybody. So everyone's paying very close attention to what is going on there. Now, in terms of the action on Monday in terms of economic data, we get new home sales. That'll come out at 9 o'clock, so nothing early there. And the Dallas Federal Reserve, their monthly manufacturing outlook at 9:30 will come out. So that's not going to move the markets, either one of those, that much. The market has been a runaway in the stock market, and every other asset class lags those tech stock asset classes. I mean, it just ran unbelievable to the upside. Some people came out today, and I was watching in the video, with $1,500 calls. In other words, that's where they think this is ultimately going. It's throwing a dart at a wall. Here's what I know. The chip is faster than the software right now. And a lot of companies, as much as AI is phenomenal, they don't know how to put it to work in their company and for what, other than what they've been doing. You know, it's not as though companies haven't been using Excel sheets, software that reads them, printing out what they should do and shouldn't do. It's the computing speed of this that is increasing everything, and that speed opens up other avenues, and the question is, how do you grow into that? That's one of the things, at least, that I think. All right. So let's take a look, if we could, at our first chart. So in the gold market, on a monthly basis, you're down 0.5 percentage point. You didn't really go anywhere. This is already going to be the last 4 days of trading as we get into next week. So pay attention. It is leap year. You get an extra day. The market did what we talked about. On a weekly chart, I kept pointing out, I said, you know, often you get to that 18-week, and that's where you have to make a decision from. Now, if we take a look here, we finished this week out at 2038.60. The last close that was a high close was here at 2036.10. So you really have a pattern now where the market has giving you the higher high. So until it comes back through the low close of last week, the bulls can say that they're grabbing control of the market. That's one way to look at how the market is acting. You can see the consolidation phase that the market's gone in. The market peaked out, as we all know, back here early December. And since then, on a weekly basis, it's pulled in here, and that 2,000 level approximately has proven to be something of a supportive area. The word is something because the trend is still down. You still have the overall pattern on the swing line of lower highs, lower lows. But we already know that we're fighting the battle at the 18-week average. Now, you hurt this market hard, in my opinion at least, if you get through 1984.80. You say to the market that there's something else happening if you get through 2064.50 on the current pattern, because that'll break that downtrend that you have in place. It's sort of on a weekly chart, you're in an area that's interesting. The daily chart's more interesting than the weekly. If we rally a lot, 2087.50. If we break a lot, 1955.90 off the Bollinger Bands, and momentum still pointing to the downside. So the chart is confusing in the sense that the trend is down, the bias is up, and we've narrowed in the Bollinger Bands going sideways. The gold-silver ratio fell back, held on the weekly basis, and has sprung back where gold is stronger than the silver market. And you see that right here. We're not over the 18-week average or the 200. See the gray line? So we're sort of in no man's land. You are in an oversold condition. Supports at the lower band of 2187. You have to get over 2344.5 in order to say to yourself, okay, yeah, this market's looking as though we've made some lows of importance. In the copper market, things are about China. How much can they do to put confidence back in their market? I expected, and I had said this repeatedly, both here and in my morning subscriber video, that during the lunar holiday, you're not going to get much buying in the metal markets. But a week ago today, traders typically return in China. They take 1 week off for the lunar holiday. The holiday still went on this week, by the way, but that's what they take off on a national holiday basis. And they came back and they did some buying. And you could see how that worked itself out over the past week and a half, 2 weeks. Okay, but we haven't really done anything. We're just sort of caught right here between lower highs, a market that has been fighting and has done it for 2 weeks, staying over the 18-week average, and it did slice through and close over the 200 and the 100-week averages as well. It's a chart that if it goes up from here, the $4 level, 397.5, could be a target, but China would have to do something pretty important to get that going. Banking, cutting reserve ratios, I don't know what it would be. In the platinum, lower highs, lower lows, fighting a battle right here at the 18-week average. The bears still have control. In order to take control from them, the market's got to get over 944, and even then it would run into pretty serious resistance of these three moving averages, so it doesn't look too exciting to me. And in the dollar index, I just see a market that is struggling for direction. It's had its bear market rally. Is it going to continue on and give you that move to the 106, 107 level? Or is this where the market is peaking out and the market is starting to say, okay, we're getting into March, we're getting closer to where the Fed's going to do something? Or do traders come to the conclusion the economy's too strong, the Fed does nothing? You know when this will get answered? The jobs report, the CPI reports, that's where you're going to know more. So up until then, the PCE at the end of this week coming up, that's your big piece of data, and then the next jobs report right after that. That's probably going to really determine what the dollar's able to start doing. I'll be writing about that and a heck of a lot more in my research, and you can get not only mine, but you can get all the research products on a trial that we have, and we'd like to show it to you. I think you'll find that our information on futures, metals, option strategies, cash markets, our price count data that we have over here, the way that we write about this, it's really for the futures trader, and it's for the person that's trading on spiders, ETFs, and they want insight that's deeper than what you normally see. I mean, this is about the commodity markets, and we write a heck of a lot about it. If you're a grain trader, I don't know that we get surpassed on the data we have, both between the oral updates all day long that's on our QT platform and or what we're able to put out in writing and so on and drop it into your mailbox. So how do you get this? Go to iraepstein.com under free offers, then just go in and choose what you want. At the bottom of this, there's a sheet, put your name, your email address, and we'll get it right out to you. I'm Ira. You have yourself a great weekend. I will speak with you come Monday. Take care.